Hello, this is Patrick. Welcome to Chart Built Wealth, Profitable Investing with Technical Analysis. Well, did you buy it? Did you buy the Cannabis ETF, MJ? I also mentioned MSOS. If you didn't, please don't buy it now, but let me give you a quick update as to where we are currently. So let's get into it. This is a long-term chart of the Cannabis ETF. MJ is the symbol. The high was somewhere around 420 back in 2018. And I want to point that out because people today are asking me, should I still buy this? And you really got to fight that urge. You're not going to win in this game if you let your emotions get you into chasing things. And you're certainly not going to make the kind of money you could on an ETF like this if you buy Nvidia today or whatever the hot stock that everybody or Apple or whatever everybody owns. You really have to find things that are out of favor and buy them at the right time. And then as a market technician, our goal is to identify new trends at an early stage and stay with those trends until they change. And the good thing about that is if sentiment is really low, then the downside is limited because people don't own it. Everybody's kind of bailed. They've gotten out of it. Like here, people threw this up they were throwing up in late 2023, early 2024. Look at the volume, people selling. Actually, we bought some here and made money on this and then was lucky enough to get out of it. But you can see now, even with the lower lows, there wasn't much buying going on. And we got this positive divergence, which told us, hey, this might be a good place to step in. And then we look for patterns, et cetera. So the big setup here is that this whole decline was in five waves. One, and that's the Elliott wave theory. So in my toolbox of 25 different methodologies and technical analysis that I use to piece together the puzzle. This is one for long-term trends that is really helpful. And so we had one, three, and five in the direction of the bigger trend, and two and four are counter trend reactions. So this was a downtrend, and these were counter trend reactions, and we had our five waves down. So now what I'm expecting is at least an A, B, C correction, meaning since this was a downtrend, the correction would be up. And so when I look at this, and there's no guarantee that it's just a correction. It could be the beginning of a five-wave advance going the other direction. We don't know that yet. We're not jumping to conclusions that we're not sure about. So, but if it is, which is the worst case scenario, uh, the smallest upthrust, we have A, B, and now we're getting into our C wave up. And after that's done, if this is all it is, then we will get another five waves down, which would be so. How far can the C wave go if it's not a new five wave advance? Well, usually it stops somewhere within the fourth wave. So it would stop somewhere between now and let's call it, what is that? Close to 60, let's call it. So, so that's kind of the big picture here. And now we're going to go to an intermediate term. We're going to take a look at, what's happened over the past year or so. Let's take a look. And here we are. So this is actually like a 6-month chart. And this was the end of the downtrend. And so we got an A, B, and now we get a C wave up. And within this C wave, we should have five waves. And we got one, triangle two, which is rare. Usually triangles are fourth waves. This is where we bought because I wanted to get in front. What I look for when I buy or when I short, I look for third waves because what do we know about the characteristics of a Elliott wave third wave is they're the most intense, they move the fastest and the largest. So, you can see one was great, but two, you would have sat on your money for 4 or 5 months, 3 or 4 months, just while it consolidated. So this is a third wave. It's classic third wave. And at some point here, we're going to get a fourth wave. Normally, fourth waves are triangles. Because this was a triangle, it could be possible that we just get a correction downward and then one more wave up, which would give us that fifth wave. And so we had huge volume today, a lot of people chasing. It's funny because a lot of the buyers were in the last hour of trading, so they actually were buying up here at the top. Now, it could be up another 5% tomorrow. MP Materials did that, but for me, I'm not going to chase. I wouldn't be adding. What I actually did today was I sold 25% of my holdings in MJ. So if it corrects tomorrow, if it's down, I don't know, 5% or whatever that is, maybe I'll add 5% back. And then if it's down another 5%, maybe I'll add another 5%. So that's kind of the mentality that I use. Uh, I'm always looking at risk first, and then I'm looking at reward. So in a ETF like MJ, I could have up to 10%. That's my own rules that I make. 10% of my portfolio in an ETF, because an ETF has, multiple companies. There could be 100 cannabis companies in this ETF. I'm not sure how many there are. So I have some diversification all within one industry, which limits your diversification, but at least it's not stock specific. So um, I never got to 10% loading up here. I got to probably eight, and it grew to about 10 or 11, or I don't know the number exactly. Maybe it's more than that. And so I sold 25% of what that position was worth going into the close. And so that's this chart. We're getting overbought. You can see this, okay? We don't have a negative divergence. That's good. This is confirming this high. My guess is when we get a fourth wave correction, this will go back and not be overbought again. And then when we get the fifth wave up thrust, we'll get a lower high on our RSI, giving us a negative divergence, which will flash a caution sign, beware, a change of trend is coming. So I know this is a lot of information, but I want you to know the thought process behind this. So let's take an intraday outlook. This is a daily chart. Each one of these bars represent a day. On the chart before that, each bar represented a week. Now we're going to look at a chart where each bar represents 2 hours. So it's an intraday chart and it covers like a month of price action. So let's take a look at that. So here we are. Here was the consolidation that I saw. So this was really a nice setup. And look at the people chasing the last hour of trading. They were buying my stock while I was selling it. And here, so we're really overbought right now. So just even in a natural, any kind of a natural pullback, especially because this was so extreme, it could be 5%, it could be 10%. And I'll add some back incrementally. So that's that. This is the point and figure chart. Now, this is also giving us some information. This will help us know whether this is an ABC rally, corrective rally, or if this is a start of something bigger. We still have our red downward sloping trend line in place. So this is, we're according and on a long-term basis, we're still in a bearish trend. And our price projection based on this breakout here is 35, which would challenge the bearish trend line. So that would be a natural place for this rally to stop. And if it does, I'm certainly going to get out of my position. And if I'm wrong and it goes higher, so be it. There's other things that I'm looking at. And, right now we have what's called a pull. When you get a row of 10 X's in a row, the point and figure charts are the least subjective. They're just supply and demand. So I really like to look at these to second guess myself on the charts that I draw that you just saw previously. And if you have 10, a row of 10, that is called a pull, and that is suggesting that you're getting overbought. So, yeah, I think, 35 could be a good barrier here. And you also got to remember, I'm bearish on the overall market. I know most people aren't because they never are until it starts going down, and then they start selling stock after the market's already down 20%, like we had back in February, I think it was, or March. Luckily, I wasn't one of those. So, this isn't the only stock I picked like this. We got Materials. This was again a third wave. We had one, two, third wave. So, and yeah, I got out too early. I still have about 1%. This is a individual stock, so I only had 6% in MP Resources, Materials. Sorry, I keep saying that. But I'm down. I still have 1% up here, and if it ends the week with a candle like that, a shooting star, I will even knock that down some. So, follow me. I get these things. I do get some things wrong. I get a lot right. I also help you manage your position, and what's the next big one? I don't know. But one good setup, and I'm just going to point out to you is TAN, the solar stocks, very much like cannabis. Um, Cannabis was out of favor. Trump hated cannabis stocks, and he hates solar stocks, anything green, right? So why would it go up? I don't know. I don't know why it go up, but this is the big pattern, and you can look at my YouTube video on it. Right now, I think I have about 6% of my portfolio in TAN. So it's again, it could work out and be really big. This looks just like China did a year ago, a year and a half ago, this exact same pattern. So anyway, thank you for watching Chart Built Wealth, Profitable Investing with Technical Analysis. Please like and subscribe, tell your friends and neighbors. Um, it would help me. I'd spend more time. I'd give you more ideas. I have other things that I do that pay me more. So thank you for watching. Have a great day.